Bueno, muy buenas tardes. En nombre del director general de Casa Árabe, Eduardo López Busquets, y de esta institución, les doy la más cordial bienvenida a esta conferencia Microfinanzas en el mundo árabe, con el estudio de caso de los territorios palestinos, una conferencia a cargo de Tawfiq Nassar, y nos acompaña también Javier Alfonso Gil, que es director del Máster Internacional en Microfinanzas para el Emprendimiento y catedrático del Departamento de Estructura Económica y de Economía del Desarrollo de la Universidad Autónoma de Madrid. Esta conferencia se enmarca en la colaboración de Casa Árabe con el Máster Internacional en Microfinanzas para el Emprendimiento de la UAM, una colaboración que además durante esta semana, del 10 al 14 de febrero, se materializa en la celebración de una serie de clases del máster focalizadas en justamente el tema de hoy, las microfinanzas en los países árabes, y que tendrán lugar en esta sede de Madrid. Posiblemente algunos de los aquí presentes sean pues parte del alumnado de este curso. Desde los primeros experimentos efectuados en la década de los 70, de 1970, para proporcionar pequeños préstamos a personas o grupos con pocos medios económicos, habitualmente excluidos del sistema financiero internacional, del sistema financiero tradicional, los microcréditos han crecido exponencialmente hasta convertirse en una sofisticada industria. Muchos de ustedes seguramente habrán escuchado o sabrán del caso de Mohammad Yunus, de Bangladesh, quien ganara el Nobel de la Paz en 2006 por su proyecto El Banco Grameen, precisamente encaminado a, digamos, proveer de microcréditos a estas personas excluidas del sistema financiero, ¿no? Sin embargo, las experiencias en la región árabe varían ampliamente según el país, y tanto en sus productos como en escala y en su nivel de inclusión. Esta microfinanciación tiene todavía un importante recorrido y un importante potencial por desarrollar. De esto hablaremos esta tarde. La conferencia será en inglés. Para aquellos que no lo entiendan, tenemos los auriculares y la interpretación simultánea. Entonces, pues podéis colocaros los auriculares en cuanto comience el señor Nassar a charlar. Y antes cedo la palabra entonces a Javier Alfonso Gil.
Good afternoon and welcome. I am here in representation of the Master of Microcredits from the University Autónoma de Madrid, and I would like to talk a little about the profile of Tawfiq. I know Tawfiq from 3-4 years by now, and I consider him my friend. And he is a very, very, very well-known person in the Palestinian state and not territory. And he is, among other things, a political commentator. Political commentator that inevitable, he talks about the reality of the Palestinian economy, the Palestinian people, and the Palestinian economy. Besides this small profile, I want to point out something very special for me. Being really an academic like he is, he has had the possibility to be abroad, to be among the diaspora of Palestinian people. But he wants to stay. He made the choice to stay in Palestine, and he is very active there. So this is one of the small few people out of the total Palestinian people outside of the Palestine who is really working in his homeland. There, he made two distinguished sentences in order to do this kind of relevance to this Palestinian state. The first one is a businessman, a business career in Palestine, which is not very easy to do due to the restrictions from the Jewish state. But even though he has been a very successful businessman in Palestine. And the other approach to his life, he's an academic. He's an engineer by training, but he is now involved in many kind of social or financial work to protect the less fortunate people in the state of Palestine. So besides that, these two approaches to his own life, he, as I said, is a political commentator. And he is very outspoken of the reality. He doesn't have any kind of auto-restrictions. He speaks what he thinks, and I think that he's one of the probably fellows to count on in the future of the Palestine. So that's, for me, I think that that's what I should say about Tawfiq, at least for the moment, and I will really appreciate you, Tawfiq, start doing your conference. Thank you very much, Tawfiq. Thank you to you all.
Thank you, Javier. Probably I'm very much less than this, but I will start really talking about the microfinance of the Arab. Let me see how it goes with technology. Yes? No? Yes. Okay. Anyway, today it will be, with the limited time that I have, I will give a very quick description of the status of the microfinance in the Arab world and in the Palestinian territories. I will not go into analysis. It will be mainly a description. It's like an eye-opener. So for people to know and understand the general idea and description of the microfinance in the Palestinian, in the Arab world and the Palestinian territories. So if anybody wants to go deeper, it's a very deep subject. We will be here in Casa Arabic for the next 4 days, but with the master students. So if anybody wants to know more, I will say, well, they are welcome to come to see the deep analysis of the situation. But today it will be mainly a description. The Palestinian territories will be taken as a special case. I will start talking about the microfinance in the Arab world, then the Palestinian territories will be a special case to discuss. I will go very quickly when I talk about the description of the Arab world. So this is the agenda. We will be talking about the definition of the Arab world, the economy, and then the microfinance. When I talk about definition and economy, I will go a bit fast. When I talk about microfinance, I will slow a little bit. And then the Palestinian territories, we will talk about historical background, the economy of the Palestinian territories, and then the microfinance. And at the end, I will talk a little bit about women and microfinance, because when I will be presenting the whole lot, microfinance, by definition, it is for marginalized people, especially for youth and women. And that's why I will give a special emphasis on microfinance and women in the Palestinian territories. Okay, I'll go with those very quickly. The Arab world refers to Arabic-speaking countries, where each country may have its own Arabic slang. As the map says, it stretches from the Atlantic Ocean in the west to the Arabian Sea in the east, and from the Mediterranean Sea in the north to the Horn of Africa and the Indian Ocean in the south. So when we talk about the Arab world, we're not talking about a small country or a single country. We are talking about 22 countries, so we're talking more or less about a diversity. We're not talking about an area with harmony. We're talking about a diversity, not only a one single country. 91% of this are Muslims, 5% are Christians, and 4% are of other religions. I say this because part of this presentation, again, I will be talking about Islamic microfinance, which is on the rise, and there should be given some special interest in this. As a fact, the most populous member country is Egypt with about 82 millions. Djibouti is the less populous, so about 750,000. Look at the diversity. We're talking about a huge country like Egypt with 82,000, and we're talking about a very small country like Djibouti with only 750,000. Most of the Arabian Gulf imports high amounts of foreign labor. Again, I say this because microfinance is usually given to the poor, and it's not given for the rich. So part of the Arab countries, we do not have microfinance in it, especially the Gulf states. I say that microfinance, when I discuss, and I will say this in a bit, when I discuss microfinance, I will not be talking about microfinance in the Gulf states, because practically the Gulf Arab states, who are very rich with oil, they do not have local pools in them to give them microfinance. Most of the laborers there are imported laborers from Asia, India, Pakistan, Bangladesh, and a lot from other poorer Arab countries such as Yemen, Egypt, and Palestine. This is only just to give an idea about the diversity. You can see small countries in area. Gaza Strip is only 360 kilometers square, while you're talking about Algeria is over 2 million kilometers squares, and with the population of very small populations in Djibouti to 82 millions in the Arab. And this is just with a graph to show the diversity in population. Again, I said this just to say there is a great diversity in the economies of the Arab countries, not only in population and not only in size. There is a great diversity also in economy. And I will show in a bit what I mean by the diversity in economy. Some countries are rich in resources, others are very poor in resources. Some are considered to be the poorest in the world, such as Mauritania and Somalia and Gaza in the Palestinian territories and Yemen, and others are considered to be one of the richest. For example, the GDP per capita for Qatar is 73 times higher than the GDP of Mauritania. This again shows the diversity in economics, and when we talk about microfinance, we cannot talk about a homogeneous microfinance, we talk about diversified microfinance. Microfinance is mainly offered in countries like Egypt, Morocco, Lebanon, Jordan, and Palestine. And when I talk about microfinance in the MENA regions, mainly I will be talking about this. This graph, again, talks on itself on the diversity of economy. This is the GDP per capita. You see the GDP per capita of Qatar, 74,000, and look, in Somalia, it's 300,000. So very diversified, the economy in this. Again, in unemployment, we talk about 59% unemployment in Djibouti, while you're talking about 8% in Syria. Now it's different. Those statistics are of 2010, before the present political uncertainty in the Arab area. And when I tried to look for updated informations on the situations, with the war going in a lot of, or troubles going in a lot of those countries, still reliable information are not there. Below poverty line. Again, I talk about below poverty line because when we talk about microfinance, we talk about poor people. Poor people means people living under poverty line, or unemployed people who are looking for a job to support their families. You look, 70% of the people in the Gaza Strip are living under poverty line, while only 3.8% of the people in Tunisia are living under poverty lines. Yemen, 45%. Sudan, 40%, etc. This again shows the diversity in the Arab world. Again, we are not talking about a homogeneous area that all live under the same situation. Now I will move to the microfinance. This very quick introduction was given to show that when we talk about the MENA region, we will be talking about the MENA region in general, and we will specify countries. So there will be a general discussion of the microfinance in the MENA region and specific discussions of the microfinance in some countries. For the purpose of this conference, I will be concentrating as a special case on the microfinance in the Palestinian territories. Okay. When we talk about microfinance, we will exclude talking about microfinance in the richest Arab states because actually, or in practice, it doesn't exist. We also will not be talking about microfinance in poorer states because there are no data, and in a lot of those countries there is not even a banking system, such as Somalia. So we will not be talking about Somalia and Djibouti, and we will not be talking about the Gulf states. We will be mainly and namely talking about microfinance in 7 states: Egypt, Morocco, Jordan, Lebanon, Palestine, Tunisia, and Yemen. And those states comprise about 80% of the portfolio of microfinance in the Arab region. So when we talk about those countries, that will represent a large portion of the microfinance we will be talking about. Microfinance, when we start talking about microfinance, always we look at indicators, economic indicators such as unemployment and participation in the labor force and people living under poverty lines. This very quick graph says unemployment is about, that's the ILO figures for 2011. Unemployment is about 6.3% in the world, 10.3% in the MENA region, in the Arab world, and 24.5% in the Palestinian territories. Unemployment between youth, which is even more important than the general unemployment, it's 12.8% in the world, 24.5% in the MENA region, and 38.9% in the Palestinian territories. And unemployment between females, because I will give special emphasis on female, 6.5%, 17.3%, and 26.4%. This clearly shows that there is a high unemployment in the MENA region. High unemployment means there is a necessity for microfinance to intervene to really reduce the number of unemployment in the area. When we talk about participation in the labor force, this is again, it will give us an even more interesting result. In the world, 65.3% of the people participate in the labor force, while in the Arab, only 50%, in Palestine, 41%. Between youth, 51, whatever. You look at the numbers. You see that in both cases, there is a real demand or a real need to introduce microfinance in such Arab countries. Why microfinance? As I said, the graph on itself says, with the uncertainty in the Arab world, not only in the past 3 years, there has been a lot of uncertainty and the bad economic situation, there have been impoverishment of the people. The people are poor. And there is high unemployment. There is low participation rate in the labor force, marginalization of youth, and again, marginalization of women. This simply means, because of all the reasons that we see, microfinance is extremely important in the Arab world to improve the level of life of the poor in the area. So accordingly, our target group here will be based on the poor. In microfinance, we always target the poor, the unemployed, the youths, women, marginalized, and for sure, all of the above, in most cases, have no access to the banking system and need small loans. Those people, in order to get them participating in the labor force and to get them working again, they need loans. They have no money to start a business. And banks do not give them loans because they have no access to banks and they are not known to the banks. And that's why we need to introduce microfinance in the Arab world. Most of the data that I will be talking about in the microfinance field, it will be from Sanabel. Sanabel is an organization. Most of the data will be from Sanabel. Sanabel is a pan-Arab association that represents forum of small and microfinance institutions, MFIs. It's a forum that has about, when it started, it has 17 members. Now it has 83 members. And all the data will be from MFIs. MFIs are microfinance institutes from MFIs who really gave their data to Sanabel, and they represent a large part of the MFIs in the Arab world, and mainly the big ones. Now, the characteristics of the microfinance in the Arab world. Loans are of short term nature, a maximum of 12 months. This is characteristics of microfinance in general, and it is the characteristics of microfinance loans in the Arab world. Small loans with a value depending on the country, but in general less than $1,000. The average size loan, as you will see a little bit later, the average size loan in the Arab countries is about $600, and we'll talk about it more in a bit. Usually, with such small loans, no collaterals are requested. Now it's a bit changing because the loan size is going up, but one of the characteristics of microfinance is not to ask for collaterals, because the banks ask for collaterals. If you want to give a loan for the poor have no collaterals. Loans for microfinance usually goes without collaterals or very small or limited collaterals. Simple and fast procedures. The poor, they need to apply for a loan. They cannot afford to wait for a committee to meet and a decision to go from bottom to up. They need to apply for a loan. They need the money today. So it has to be very simple procedure where they get the money, and this is one of the characteristics of the microfinance in the Arab world. The target group in the Arab world, and we will be examining this and showing this again, the poor people with no access to banking system. When microfinance started in the Arab world, and in most of the world, it started for productive projects. Now it's a whole industry covering ranges of services other than loans for micro projects, for education, to improve the house condition, for wedding, and etc., etc. Now it's an industry with diversified products and not only one single product which is for production. Yeah, okay. Again, characteristics. Now we will start talking about numbers a little bit. Maybe this will bore you, but microfinance is only about numbers. The total portfolio in the MENA region is estimated to be about $1.6 billion. People will say, so what? What does that mean? 1.6. Is it enough? Does it meet demand? Or we need more? We will be examining this a little bit in this conference. The 1.6 is only 2% of the total loan portfolio in the world. So compared with the total portfolio of microfinance in the world, it's a small number. This will show how this portfolio is divided. And please try to remember, Latin American and the Caribbeans, it takes 36% of the portfolio. East Asia and the Pacific, 28% of the portfolio. The MENA regions, only 2% of the portfolio. This on its own, again, it has no meaning if we do not really, in a bit, connect this with the number of borrowers, because this money will be giving to people. What is the number of people who are using and taking this money? And then we can talk about the well-off of any area. In the Arab world, Egypt and Morocco comprises over 76% of the number of active borrowers and 61% of the gross portfolio. So when we talk about microfinance in the Arab world, Egypt and Morocco are over 60%. In terms of portfolio, and over 3/4 of the number of active borrowers. Egypt on itself comprises 46% of the number of active borrowers, while only 23% of the gross portfolio in Morocco. Comprises 30% of the number of active borrowers and 38% of the portfolio. Look at this number. When we talk about Egypt, 46% of the active number of borrowers, while only 30% of the portfolio, which means in Egypt, the microfinance industry are targeting the poor more, because less money, large number of borrowers. When you divide the money by the number of borrowers, it means that the average loan size is small, which means they are targeting the poor more. We will talk about this in details in a bit. This means that the average loan size in Egypt is smaller, and they target the poor more. And usually in microfinance, when we really try to judge on how effective the operation going in any country, we look, is the microfinance industry in that country targeting the poor, or it's not targeting the poor? In Egypt, it is really targeting the poor. Okay. We talked about this, so I will not be talking about it again. The gross portfolio, this is only to show the graph of what I have been talking. Egypt, 23% of the portfolio, while Morocco is 38% of the portfolio. Palestine, it takes a smaller value. It's about usually 6%. Yes, it's 6%. Palestine is 6% of the portfolio. And when we talk about Palestine, 6%, it's about one quarter of the portfolio in Egypt, but the number of active borrowers in Palestine is very much less. So the average loan size, we will see it's very high. And we will talk about it. Does that mean the microfinance industry in Palestine does not target the poor? We'll discuss this and see this again in a bit. Active borrowers, Egypt has about 1,400,000 active borrowers. Then comes Morocco with about 900, and look at Palestine. It's very small. Palestine is about 36,000 active borrowers. So we're talking about very small percentage with higher portfolio. Again, we will talk about it to see how it goes. This graph shows, again, the number of active borrowers. In Egypt, they are 46%, and in Morocco, they are 30%. Compared with the world, how can we compare the MENA region, the Arab world, with the world? The number of active borrowers in the world are estimated to be about 95 million people. In some literature, they say 94, others 95, but we're talking about 94 to 95 million people. The MENA region, the Arab world, only 3 million. This comprises a very small number, which is about 3.2%. But if we connect this number to the portfolio, the MENA region having 2% of the total portfolio, but having 3.22% of the number of active borrowers, which means the average loan size is smaller than other countries. And again, it means that the microfinance industry in the Arab world is targeting the poor more. When we talk about average outstanding loan per borrower, more or less, I will not go into the definitions. Average size loan, it's up in the MENA region, it's about 610. It's actually 520 when we look about different formulas. I don't want to get you lost with different formulas, but the average outstanding loan over borrowers in the MENA region, it's 610. Worldwide, it's 468. When you look at this number, you say, well, it's above average. We say it's above average. When you look at Latin America and the Caribbean, it's over 1,000. East Europe and Central Asia, it's about 1,608. But look at South Asia. South Asia, it's 144. So in South Asia, where Muhammad Yunus started the operation of what Karim said, they are really there targeting poorest of the poor. And they have the best operation on microfinance because they are targeting poorest of the poor. For microfinance to work, we need to have service providers. In the Arab world, there are about 500 MFIs, 500 microfinance institutes providing this service, 54 of whom present their audited reports to Sanabil and are published in the mixed market. So when we talk about data, we are talking about the data of the 54 MFIs, not the 500 MFIs, but the 54 occupies 82% of the microfinance market. So when we talk about microfinance of the 54 MFIs, it represents a lot of the microfinance portfolio and the microfinance number of borrowers. And we cannot talk about the rest because they have no audited data and we cannot really rely on any unaudited data. Most MFIs are of a small size. They have an average of about 40,000 active borrowers. Compared with the world, this is a small number. Tunisia, Morocco, Egypt has an average of 86,000 active borrowers. So in Tunisia, Morocco, and Egypt, we have bigger MFIs than in other countries like Palestine. Legal environment is one of the most important issues in microfinance. This will be discussed in the next 4 days a lot with the master students because depending on the legal environment that the MFIs work, it really depends, can they give poorest of the poor or they cannot? Are there restrictions from the state or they are not? Are there restrictions from their mission or they are not? This will be discussed again in details, but out of the 54, we have 39 MFIs who are non-governmental organizations, 10 not-for-profit financial institutions, 3 banks, 2 international organizations, and 1 governmental organization. Only 3 banks out of the 54 MFIs, which means banks usually are not interested in microfinance. And that's why we need microfinance institute to serve the poor. The banks are not prepared to serve the poor. They only want to work with large and big clients to make their money. MFIs are the bodies who are really interested in offering microfinance to the poor. The commercial banks, there was one in Palestine. Unfortunately, the bank is there, but it stopped its microfinance operation because they're saying it's not worth it. Let's work with the rich and let's make more money. So even this one bank in Palestine, it stops. There are 2 banks in Egypt which are still operating. 6% of the active borrowers are served by those not-for-profit organizations, 7% of the total portfolio. So not-for-profit organizations, they have 6% of the... this again shows that there is no unified legal system for the MFIs, even in the same country. Do we need it? It's a question that needs to be answered and discussed. Do we need to unify it? Unification sometimes makes restrictions. Sometimes it's better for microfinance industry, which work with the poorest of the poor to work with different legal atmospheres. This, again, will be discussed tomorrow or the day after tomorrow with the students in details. Palestine, Egypt, and Morocco have introduced new laws in order to unify the legal environment and put MFIs under more financial control. In Palestine, there is a new law which was put in 2011, and it will be enforced by the end of this year. This, yes, it is organizing the legal environment of the MFIs working in Palestine, but it's putting much more restrictions on how to give loans and who is accountable to who, and this probably it will reflect itself on the shape of loans that will be given to the poor. This is a very quick graph just to show 68.5% of the MFIs in the MENA region are MFIs. Okay, what legal system for the MFIs do you think? It's open question. It has always been an open question with the pros and cons. It needs a very lengthy discussions and very lengthy research to see which is the best system to fit the microfinance industry. I will be covering quickly two indicators to see how efficient or how good the microfinance industry in the Palestinian territories is going. Usually we have 5 different indicators to look at. One of them is outreach, which I will be discussing today. One of them, outreach, which means is the money the MFIs are offering is enough to meet the total demand of the microfinance sector? Is there enough money for everybody who is interested in a loan, or there isn't? So if there isn't, we need to put more effort in really getting more money into the microfinance industry to fit the poor. The other one is the penetration. Are the people who are taking money from the microfinance industry are the poor? So is the target group the poor, the women, and the marginalized? This is another indicator we will be looking at. Other indicators such as efficiency, sustainability, profitability, we will not be looking at it today. It will be discussed mainly with the students because it's not of very interest to everybody. So we will be talking about outreach, how many clients are being served, client poverty level, how poor are the clients. Those two indicators I will be talking about. Collection performance, how well are the MFIs are collecting their loans? Because we talked about one of the major characteristics of microfinance. This is to keep going, to offer money to the poor without collaterals. If you do not take collaterals, how do you guarantee that you get your money? We will be examining, and it has to be examined usually, do the MFIs get their money back so that it will be a revolving fund serving the poor. And financial sustainability, if you do not collect your money, you will fail. If you collect your money, you can continue. So are those MFIs sustainable? Is the microfinance industry in the Arab world is sustainable and it can continue for the years to come? And then efficiency, how efficient those organizations would be. Usually NGOs organizations go sometimes on the bureaucratic level, high cost, low services, which means that the efficiency is low. They need to keep taking money from donors and funders. This is something that has to be examined when we talk about microfinance. For the purpose of this presentation, we will only examine outreach and penetration. For more details on the other indicators, you may attend the 5 days. I'm making propaganda and marketing for the 4 days to come. So anybody who wants to really know more about microfinance, it will be discussed in this building in the next 4 days. Some social indicators will be discussed at the end of the presentation, and penetration. Social indicators concerning women. There has been a research in the Palestinian territories examining the social performance of, or the social indicators, how the loans affects women. Women in the Arab world is marginalized, including Palestine. And because women are marginalized, it means that more concentration should be on women and giving loans to women. And if the women take the money, what happens? We will talk about it at the end of this conference. When I talk about market outreach, how many clients are being served? This means how well the MFI are meeting the demand, and what is the financing gap. Do we need more money to put in the sector, or we do not need more money? This table really summarizes it all. It summarizes the situation of the microfinance in the Arab world. If we talk about the countries like Egypt, Iraq, Jordan, etc., for each country, we have the population. We have the population between 16 and 75. This is the number of people in the age of work. We look at the poverty line, because microfinance is to serve people who are mainly under poverty. If we multiply the percentage of poverty by the population of the people between 16 and 65, we will get the number of the population under poverty. This is the target group of the microfinance industry. We add 20% to this just to serve the people who are a little bit over poverty. We get to the number of 12 million, etc. in the first line. People, not everybody is seeking loan. If we assume that 40% of the people are seeking loan and 75% of the people have been granted a loan, this says what is the demand in each country. The total demand of the microfinance industry in the Arab world is about 13,500,000 people. So we have about 13,500,000 people, person in the Arab world are seeking loans for microfinance, from the microfinance industry. If we usually multiply by this number, but for comparison, demand or people who might be needing loan and seeking loans and agreed for loans, 13.5, we only have 3 million. This means that there is huge demand that is not met in the Arab world. The gap is about 10.5 million people. If we multiply the 10.5 million people by the average loan size, which is about 600, it means that we need to pour in about $6.5 billion into the microfinance industry to meet the demand of the poor people who are in desperate need of loan. If we need to improve the style and the life of living of those people, that means we need to put about $6.5 million in the market. So this is an open question for the governments, how they should really emphasize on helping the microfinance. If we need growth, sustainable growth does not only come through huge investment. It comes through very small investment, but with very large number of people. This is an open question for all the governments in the Arab world, that they really need to look seriously for the microfinance industry. For penetration, I'll talk about it again in a bit. There is low penetration rate in most countries. Only Jordan, Tunisia, and Morocco have penetration rate of around 40%. I'll talk about it more in a bit. So the microfinance sector in the MENA needs more money and more attention. And this is an open really plea for all the Arab governments in the Arab region. Two indicators to indicate penetration. Penetration means, are the loans going for the poorest of the poor? This is number one. And are they going for females? In the MENA region, 68% of the loans are being given to female, compared with 62% worldwide. The only region which tops the MENA region is South Asia, with 92%. This again shows us that in South Asia, microfinance is really in the right direction. It's targeting women, 92%. In the MENA region, it's about 60%, 68%. It's above average of the world, but not very much above that. Another indicator. Usually we have an average loan size, and this average loan size, it is compared with the GDP per capita of any country. If we divide the average loan size in the MENA region over GDP per capita, it's about 13%. Usually in international practices, anything below 20% is good enough. In the MENA region, it's 13%. In the South Asia, it's 18%. In the MENA region, it's even better. The reason for that is the GDP per capita of a lot of the Arab countries is low. So, just to conclude on those two indicators, which indicates penetration in the MENA region, penetration is acceptable. It is going around the international standards, and to most indicators, it is acceptable. Now I will move to a very interesting subject, which is Islamic microfinance. The reason I will be talking about Islamic microfinance, because until the late 90s, only conventional microfinance was available in the Arab world. I said at the beginning is about over 90% of the population of the Arab world are Muslims, and they have restrictions, and they have religious beliefs. Some of them, especially the poor, do not accept to take loans except if they were on the Islamic microfinance, and that's why a lot of organizations and MFIs decided to go into Islamic microfinance. I will go very quickly on the Islamic microfinance. What is Islamic microfinance? And I must be frank here, because personally I have an opinion. I will set facts as they are, and then I will say my opinion and my conclusion on microfinance, Islamic microfinance in the Arab world. Because the idea behind Islamic microfinance is a very noble idea, as we see. But in practice, what is being practiced is not the same as the noble idea of the Islamic microfinance idea. Okay. So Islamic microfinance starts behind the idea. Money has no intrinsic worth. Money is not an asset by itself, and can increase in value only if it joins other resources to undertake productive activities. So money is not in Islamic microfinance, except in one model of Islamic microfinance. People are not allowed to take money when they go to borrow. They are allowed to go into an activity, which we will discuss again in a bit. For this reason, money cannot be bought and sold as a commodity. This will give us one simple conclusion on Islamic microfinance. Interest rate is forbidden. People cannot take loans with interest rate. Instead of taking money and paying interest rate, the bank or the MFI will buy them goods and resell it to them. And this will be discussed in details because there are a lot of things. I'll talk about it in a bit again more. So providers of funds are not considered creditors, who are typically guaranteed a predominant rate of return. It's not allowed to say, I will give you money and you $1,000 and you will repay them 1,100. What is allowed, I will buy some goods for you, the bank will buy it or the MFI will buy it for $1,000 and will resell it on installments for 1,100, and the 100 is the profit. Or there are other modes like partnerships, like sharing, like the bank will put the money and will go into a partnership with the client who will put the effort. There are a lot of different models, but practically interest rate is considered forbidden in Islamic microfinance, and there should not be it. And this is the main difference between conventional and Islamic microfinance. There is no interest rate, there is a buying and selling in Islamic microfinance. So Islamic finance, however, extends beyond the ban of interest-based transactions. Additionally, key financial principles include the following. One of them is there must be a partnership, or there must be an activity. There must be an actual, real economic activity. People cannot take money and go and spend it on something else. There should be a real activity. And the other one, no activity which is not allowed by Sharia or by Islamic rules, such as trading with alcohol, pork, or gambling. Those three sectors are not allowed to take Islamic microfinance loans. Accordingly, we can define Islamic microfinance a banking activity that is consistent with the principle of Islamic law, Sharia. This is the very basic decision that anybody who is to work with Islamic microfinance. I'm explaining this because no matter what you believe, or you agree or you disagree, Islamic microfinance is under demand, and if we are targeting the poor, then we have to work with Islamic microfinance, because the poor is much more important than believing in this way of really financing the poor, financing people or not. Sharia prohibits the payment of or receiving of specific interest of fees, known as riba, for loans of money, guaranteed profit. Under Islamic microfinance, there is no guaranteed profit. Riba means interest paid by the poor. That's how the idea started. Why this came in Islam? Because at the late time of Prophet Muhammad, there was money lenders who take huge interest rates, and at the end, people are unable to pay the interest rates and the money, and they become slaves. And that's why at that time, Islam prohibited this activity, because of the greedy money lenders. That is the basic. So Islamic banking is the provision of money, services, or products by an individual, a bank, an organization, or the state to the people who need such services, either as a kind donation or as part of a profit sharing. In some countries, it could be kind donation. This is one of the models of Islamic microfinance. It's very, very slim and tiny. It's like some people are doing it as part of their social responsibility. Requirements, and this is where it becomes harder and harder. Islamic microfinance should not break Sharia in any way, okay? To make sure of the MFIs should have a technical board of trustees. They call it the muftis, that put the rules and program conditions according to Sharia, as well as monitoring the operation. For this to become acceptable, there should be people from the muftis who will say that this operation is legal or it is not legal. And I can assure you that in none of the MFIs who are practicing Islamic microfinance, they have such a board. They say this is Islamic microfinance according to their understanding, and they work. In big banks, they can afford it, because if you are to appoint a board of muftis, this is not for free. It's like kosher. Kosher is not for free. Whoever will go and work, they have to pay money. And this will make microfinance even more expensive. But at least of what I know, none of the MFIs have a board of trustees of muftis. And also, there have been technical differences on the understanding of Islamic microfinance and between the muftis themselves. Like a cap on the percentage of profit. There is a cap? And what is the cap? Are people, because the whole idea of forbidding riba is not to have a very large percentage of interest rate, so people cannot pay it. There is no agreement between anybody on a cap, so there is no cap actually, but there is differences between the different muftis. Extra payments on defaults. If there is a default, do you take extra money on the default? If you are working with an ordinary conventional thing, yes, there will be extra money. Here, there is no agreement on this. Sometimes they go around it, they say we'll take a fine, not extra interest, but at the end of the day, it's money paid. Should MFIs insist on the repayment case if the project failed? This is again it's a discussion between the different people. In conventional, yes, a loan has to be repaid, because if it is not repaid, there will be no sustainability for the MFI. And if there is no sustainability and there is no revolving fund, then the MFI will stop and it will not be able to serve the poor. Justification, this is just to justify why we really need to introduce Islamic microfinance. Palestinian Territories Planet Finance Study. There was a study in 2007 for Planet Finance. 56% in the West Bank, 61% in Gaza prefer Islamic loans. So if the poor prefer Islamic loans, you need to, it's their right. Let me say it's not their need, it's their right. If people are demanding Islamic law, it's their right to have what they want. 30% of the interviewees in the West Bank and double that percent, this is 60% in Gaza, refrain from taking loans for religious reasons. So there are people who are not taking loans for religious people. If we want to put those or to engage those in the labor force, then we should introduce a new kind of loans for them. 30% of in the interviewees will only take Islamic loans. In Egypt, it was surprising even to me. 86% were not interested in Islamic laws. In Egypt, it was surprising because Egypt is very well known to be, and again, this is a Planet Finance study. 7% are interested in Islamic loans if cheaper only. 7% are interested in only Islamic loans. 35% prefer conventional loans for the freedom in investing the money. Because I said, in conventional loans, you take money and you invest it the way you want. In Islamic loans, no, it's a little bit restricted. In October 2010, a study was conducted by Muhammad Ghanem. This is a guy in Gaza. He did it for his master. 43.3% prefer Islamic loans, while 37.9% prefer non-Islamic loans. 51.7% do not see any difference between Islamic and non-Islamic loans. Whatever. All those figures and numbers says that there is a portion of the people who want Islamic laws. If people want Islamic loans, then we have to offer to them Islamic loans. And I will now try to say my opinion. To me, I do not see a difference. I am one of the 51.7% who do not see any difference between the Islamic and non-Islamic loans, personally. Because if I go and I say, I want to buy a cow for a project, and it's worth $1,000. I go for an MFI and I say, give me $1,000, I want to buy a cow. How do you want to repay? Over installments over 12 months. All right, you have to pay 10% flat interest rate, and you will pay it $1,100. That's conventional lending. And if I go to microfinance, I want a cow. All right, we'll buy you a cow. They go and buy the cow for $1,000 and sell it to me for $1,100. For me as a client, an investor, I do not see a difference personally. But regardless of what I see and regardless of what you see, if the people want Islamic microfinance loan, it's their right to have what they want if you want to stay in the market. Okay? This is, we talked about it, justification. So based on all what we have said, there is fair demand on Islamic microfinance, but not overwhelming demand. Islamic microfinance, but there is one interesting point in here, yes. The survey and synthesis of other available data revealed that Islamic microfinance has a total estimated global outreach of only 380 people. 380,000 people. Imagine of the millions, it's very small percent. It's not getting to the people. And it's mainly in Bangladesh, Afghanistan, and Indonesia. And I will show you some data a little bit later on this. But there is a fair demand, not overwhelming demand. More efforts should be put on promoting Islamic microfinance. Islamic microfinance should be introduced along with conventional microfinance. Not only we should give the choice of the people either to take Islamic or conventional microfinance. There are several models in Islamic microfinance. In brief, lending and borrowing should be for free without any interest, but banks and microfinance institutes need to charge their customers in order to be financially sustainable and make a return on their investment, because Islamic microfinance says it's for no interest is allowed. Banks need. So based on the above, Islamic economists introduced different ways of Islamic financing to go around the interest rate issue. It was first discussed as a concept in the 40s of the 20th century, but introduced as financing in the 70s and the 80s. The first Islamic bank was established in Dubai in 1974. So actually it started working in 1974, the idea of Islamic financing, but Islamic microfinancing only started in the 90s. There are different models of Islamic banking, such as murabaha. This is cost plus. Murabaha cost plus, which means I buy the product at a certain price, I sell it to you at a different price over 12 months. And there is mudaraba. This is profit sharing, which means I work, you give me the money, and we share the profit. Usually it doesn't go exactly like this. You give me the money, I do the work, we share the profit. Sharing the profit means if I am in let's say a trade business, yes, there is profit, we share the profit. There is not a certain amount, a certain percent that I have to give you. There is, instead of mudaraba, there is what we say muzara'a, which means we go into the agriculture sector. At the end of the season, I have 50% of the output, and the bank will have 50% of the output. But the bank can do nothing with the fruits or with the. So they ask the client to sell it and give them money, and that's where again we go around. I give you back money, and I do not give you back goods. And in murabaha, and this is practical experience of mine. I went to a bank and I asked him, I said, listen, I want to buy, let's say, aluminum. I work with aluminum. How much you need? I need them $10. All right, $10, I'll give it to you with 6% interest, and you have to pay them over 12 months. I went to an Islamic bank and I told him, I want to buy aluminum. Where do you want to buy the aluminum from? I want to buy the aluminum. And the other bank asked, where do you want to buy the aluminum from? I said, I want to buy it from a certain company. All right, you buy it, you get us the invoice, and we transfer the money directly for this company. This is a conventional loan. For the other, he said, where do you want to buy? I said, all right, we'll buy it for you. You go and negotiate the price. You get us a pro forma invoice. We'll buy the aluminum. It will be imported on our name, and then we'll resell it to you at a different price. I identified the company I want to buy from. I negotiated the price. I negotiated the quality, the specifications. They bought the goods for me and resell it for me. To me, it's the same, with one difference. The Islamic bank to me was a 1% extra charge. That's why I say personally I do not see a lot of differences, but this is life, and this is the case. Al-Murabaha, as I said, it's cost plus, is the same model used over 70%. This is one more problem. Over 70%, and now it's over 94% are going for Murabaha, which means they will buy you the goods. Actually, there is no actual physical acquisition of the good. In trade, I buy and sell. There is a physical acquisition. In Murabaha, in most of the MFIs, in all of the MFIs, and in most of the banks, there is no physical acquisition, which means it's only on paper. And that's why I say there isn't a lot of difference. MFIs faces the problem of an additional cost of having a trustee board. Studies in most Islamic countries indicated a lack of understanding of Islamic loan models, both among the clients and MFI's employees. There is a lack of understanding. That's why people do not really understand murabaha, except, as I said, it goes on paper. Nothing is physical. In general, the principle of Islamic and conventional microfinance is the same in terms of cost of lending. And in a lot of the cases, to the client, cost of lending is important. But since the needy and the poor believes in such models, and fair percentage refuses to deal with traditional microfinance, MFIs should use such models in order to reach the poor and needy people in Islamic world. No matter what you believe is, I think, and I believe that MFIs have to work with Islamic microfinance. Okay. Those are conventional, okay. No need for this. Okay, this table summarizes the status of the Islamic microfinance not in the Arab world, but in most Islamic countries. From this table, we will see that Islamic microfinance only serves about 300,000 people, and this is very low. The total portfolio is about 197, and if you remember, 300,000 people compared with 95 millions in the world. In the Arab world, probably it's about, or in the Muslim countries, probably it's about 1/3 of this. This is very small. This is very small. This study of CGAB, it's just showing us again that Islamic microfinance is not being tackled enough in the Arab world. We need to put more effort into Islamic microfinance. This is what I wanted to talk about, to say about the microfinance in the Arab world. Now I will talk a little bit about microfinance in the Palestinian territories. The reason I take the Palestinian territories as an example, because microfinance, with all its indicators in the Palestinian territories, it's going like a seesaw, up and down, up and down, up and down, really depending on the stability of the political situation in the region. When the political situations worsen, the GDP goes down. It means that there is more need for microfinance, but there will be a lot of default on payments, so there will be a drop on the microfinance. The MFIs will take a break to recover, etc., etc. In there, it's not a post-conflict situation. It's microfinance in political instability and in conflicts and situations, which make things very difficult. Just again to give a very quick idea on the situation in the Palestinian territories, the population is about 4 million. In the West Bank is 2,600,000, and in Gaza it's 1,600,000. Before we went into this conference, somebody asked me, the Gaza and the West Bank are like two states, yes? And I said, you may say so if you look at the map. The West Bank geographically is separated from the Gaza Strip. When we talk about economic indicators, we calculate all economic indicators for the West Bank on its own, for the Gaza on its own, and when we work the combined indicators. And usually they really differ a lot, because in Gaza Strip things are very tough, and there are more poor people, and there is more poverty, and there is less GDP per capita, etc., etc. So that's why when I talk about Palestinian territories, in a lot of cases I say West Bank and then I say Gaza. This is the population, the size. West Bank is about 5,860. Gaza is only 360. Population density, 452 inhabitants per kilometer. And look at Gaza, 4,567 inhabitants per kilometers. People in Gaza are living like like sardines in a can. It's very, very, very populated area. Large number of population living in a very small area. Palestinian economy is characterized by family businesses. We have about, this is statistics, about 145,000 businesses are registered in the Palestinian territories. Much more are not considered informal. Look at this, 99% of the businesses are micro, small, and medium size. And I will show a little bit more. 89% of the establishments composed mostly of businesses run by less than 5 employees. And this shows the importance of having microfinance in the Palestinian territories. It's family business, it's small businesses, micro businesses with employees less than 5 people. 89% less than 5 employees, 7.6%, 5 to 9 employees, only 1%, 0.1, 0.2, 0.9, about 1% of the businesses have more than 20 employees. This shows the character of the Palestinian economy, small and micro, in terms of number of employees, and not, okay. Now this is a little bit of politics. It has to go with the presentation. Israel was established in 1948, over 78% of what was historic Palestine. The 22% which was not occupied were administered either by Jordan, West Bank, and Egypt, Gaza Strip. This is why we took Gaza and West Bank. Israel occupied West Bank and the Gaza in 1967. 1944, there was an agreement between the Palestine Liberation Organization and Israel, where the Palestinians took control of about 18% of the West Bank and Gaza. This was enlarged to be all of Gaza and then 20% of the West Bank in later years. This agreement was supposed to lead to a total Palestinian control over the West Bank and Gaza in 5 years. Unfortunately, it did not. Due to complicated political and security differences, no final agreement. Within the agreement, the two sides agree on economic protocol. And this is what is important to me here, because I'm not here to talk politics, I'm here to talk about economy. Within this agreement, the two sides agree on an economical protocol organizing the economic relationship between the two sides. This agreement was called to be, or it's known now as Paris Protocol, because it was signed in Paris. According to this accord, Israel and the Palestinian territories are a single custom envelope with overall Israeli decisions. There where the problem of the Palestinian economy starts. Accordingly, Israel controlled decisions on both economies, including trade movements, custom tariffs, indirect taxes, borders, and other things. As a result, prices in the Palestinian territories were very similar to those in Israel, for the exception of real estate and transportation. GDP per capita in the Palestinian territories is around 1/20 of that in Israel. The GDP per capita in Israel, it's 20 times greater than the GDP per capita in the Palestinian territories, with almost the same prices in both areas. Low GDP and high prices will have a significant effect on the microfinance sector, and control over transportation, goods, and people had also significant effect on the microfinance in Palestine. During this presentation, we will discuss all effects on political instability and occupation on the microfinance. This is just to show how it goes. In 2011, the GDP per capita in Palestine was 1,635. In Israel, it was 31,281. And we both are in one single custom union. Running short of time. I have 15 minutes, yes? You told me one and a half hour?
Yeah. Well, it's more like 50 minutes, but no, for the whole thing.
For the whole thing. Okay, for the whole thing. Oh, if it's for the whole thing, I will go very quickly on this. Okay. I have statistics. I have statistics for, again, which the same as the MENA region to justify why microfinance is important in the Palestinian territories. I only want to go, this is the MFIs. Now we only have 8 MFIs working in the Palestinian territories, 2 for not-for-profit, 3 for-profit, 1 union of cooperatives, and 2 NGO, 2 international organizations. This issue needs to be discussed. Okay, this summarizes the whole issue of the Palestinian. I'm sorry, but I thought I have 1.5 hours, but I will go very quickly. Don't worry. Okay, this again summarizes the microfinance sector in Palestine with unemployment, people living under poverty. Now we have a demand. We have a financing gap of 143,000 people. We need 143,000 people. If we multiply those again by the number of loans, we need a lot of money to be pumped into the microfinance sector in Palestine. This graph, I will go, because women is important in microfinance. I will go at this. Look, in Palestine, gender gap in the working force. Women who are participating in the working force, they ranges between 11% in 1995, 14.7% in 2010. While men who are participating in the workforce, we're talking about 66%, around 66%. This shows clearly that women are marginalized in the Palestinian territories. Why people are not participating in the working force? Women, because of housekeeping. So we need to give money to women in order to get out of the housekeeping role that they have and participate in the society. Why? Because, okay, why we need to give them this? Number one, we need to give them access for funding and not to marginalize them even in funding. There was a research which will be discussed tomorrow. Okay, I will give the indicators very quickly. This is in here. Okay, what we found in the Palestinian territories, women obtained the loans were from poor families. So microfinance or MFIs in the Palestinian territories are going in the right direction because women were having equal opportunity with men, except with 2 organizations. With CGAP said they are giving them better opportunity and giving positive discrimination with women. Those are Asala and whatever. I forget the other one. But Asala is one of them. Women obtained loans were from poor families. Women got loans have low resources of income and limited opportunities, which is in the right direction. There were elements and systems that could facilitate or limit, and we examined those. One of the limits that were put is the legal framework. And this is why I said we need to really discuss the legal framework. And there is a link between MFI vision and the regulations in terms of microfinance. I will stop in here for discussion. Thank you very much for your attention.